Welcome to Mex Moves, our weekly podcast on Mexico business and finance. I'm Damien Fraser. Eduardo, how are you today?
Doing well, Damien. After 2-week holiday back in Mexico, safe and sound, ready to go.
Good. Well, this week we have an interview with Ricardo Pintado, so Managing Director at UBS Wealth Management, based in Miami. Ricardo looks after, along with his colleagues, Mexico Wealth Management for UBS, as well as some other markets. He's going to talk about the wealth management industry as it pertains to Mexico and how big private banks and wealth managers and the independent advisors address the needs of Mexico's wealthy and ultra wealthy. Before that, Eduardo, I thought we'd talk about Mexico's reasonably good trade numbers with the US, although not as good as some other countries' trade numbers with the US in the first half of the year. The US reported its first half and second quarter trade numbers. I thought we could also talk about Mercado Libre, which reported its second quarter numbers. And I think it's also worth addressing Pemex, which had, as you saw, slightly better second quarter numbers, and also this huge Mexican protein or beef company, SuKarne, that Reuters in an exclusive said was for sale for $2 billion. The company didn't confirm that. So Eduardo, do you want to kick off with Pemex? What did you make of their numbers? They pretty much the last company to report in Mexico.
Yeah, well, they gave us a pleasant surprise according to the numbers that they put out in terms of their operational profits, revenues. Obviously, this was all helped by the higher oil prices that the war in Iran or the obstruction of the Strait of Hormuz is generating in terms of higher oil and oil-derivative product prices. But it was a good quarter for Pemex with a new chief executive officer on top. Not that the company is out of the woods by any stretch of the imagination, but it not only grew revenue, like I said, operating profits, EBITDA, rising significantly, changing its net profit in the second quarter versus net loss in the same period last year. So overall, the company gave us a slight glimmer of hope. It also was able, thanks to its better operating performance, to lower its overall debt. It restructured some of its debt, so its long-term debt, it's now 84% of total, only 16% is debt, which will help it face its debt payments in future months and in future years. I was happy to see a company that I've been very critical with to give a glimmer of hope after many, many quarters of disappointing numbers. Obviously, the company has yet to make big announcements in what is really most importantly, which is investing with private companies in oil fields that may generate greater production for it, for the country, tax revenue, etc. But at least it seems like the second quarter, like the Mexican economy did last quarter, probably reached a lower plateau, and that it might come up from there in the coming months. What did you make out of it, Damien?
Yeah, no doubt that they're good numbers. I think the highlights, as you mentioned, revenues are up 30%, helped by higher oil prices, but also first time in a while, hydrocarbon production increased by 5%. So that's encouraging. In addition to that, refining finally exceeded 1 million barrels per day, I think for the first time in maybe 2 decades. So that was encouraging. And then thirdly, as you mentioned, debt was down. Financial debt, I think went to 77.5 billion, which was a 9% reduction. Now, that was mostly because of the equity infusions that Pemex received last year, reflected in this year's balance sheet, but obviously helped by the fact that the company also produced positive operating profit and EBITDA. Now, the company was helped by the government reducing its so-called YEPs, or excise tax on gasoline. So Pemex was able to keep on selling gasoline more or less the same prices as a year ago, but Pemex was getting a much bigger share of that price. So what was good for Pemex was not so good for the federal government. If gasoline prices had gone up by the amount that international oil prices have gone up, maybe that would have curtailed demand a bit and hurt Pemex. So there was a sort of indirect subsidy. Also, on the subject you mentioned, there was also, I think, wasn't really mentioned by Pemex, but Woodside is a big Australian oil company, naturally, and they control this big ultra deep water development called Trion, and they reported their numbers. They invested another $275 million in that. 3 of the 24 wells are now complete. Overall, it's at 64% completion, and it's sort of on track to be producing 100,000 barrels per day. And that's a very complex project that's been around for a while. And there are also some other private developments in partnership, for the most case, with Pemex that are going to be coming on stream. So quietly, no one's making a lot of noise about it. There's a little bit of good news on the private side as well.
Yeah, sounds like some things are moving in the right direction that we've been hoping for. And still a long road for Pemex to come out. There is this agreement with Petrobras for deep oil exploration. So we have to be demanding, but also patient for the company to show us a little bit more of a turnaround.
So we move to trade numbers. The U.S. census reported the United States trade numbers overall and per country. Mexico reported a larger trade surplus with the U.S., or the U.S. a larger deficit with Mexico, got to $102 billion, up from $96 billion a year. And as that would reflect, exports outgrew imports for the first half and very much for the second quarter. So in Mexico's U.S. imports from Mexico rose 13%, and faster than the growth of U.S. exports to Mexico. But even so, Mexico's export growth was to the U.S. was a lot lower than Vietnam's, Taiwan's, for example. So although we can congratulate Mexico for its good performance, even if it might eventually complicate the USMCA negotiations, because Trump and his people are very focused on the deficit. Mexico's surplus to the US grew, as I mentioned, by 6%, whereas you saw Vietnam and Taiwan's surplus to the US growing by 30 and 50%. So Vietnam now has, in the first half, had a surplus of the US of $116 billion, Taiwan $113 billion. And actually, Taiwan overtook Mexico as the country with the second largest surplus with the US. Just Taiwan's surplus doubled in the first half of 2026 versus the first half of 2025. So a lot of this is AI, especially with Taiwan. So the US is importing a lot from Taiwan, as it is from Mexico, AI hardware that are being used to build these data centers, among other things. And Taiwan's a big beneficiary. But Vietnam, as far as I know, isn't majorly driven by AI-related hardware. So its surplus with the US grew by $30 billion. Even Thailand's increased by $25 billion. So, Mexico has benefited from USMCA, which has exempted tariffs on supposedly 85% of its goods. But I think that number is a bit misleading, because there's the famous Section 232 on cars and steel, especially cars, which is part of that at 85%, but Mexico's paying 25% tariffs, 50% tariffs on steel. And then I think there's a lot of paperwork to be compliant with the USMCA, which might have slowed down Mexico growth. And then finally, I think China's exports to the US have dropped significantly, and Vietnam is a more obvious kind of substitute and Thailand for China. So you're seeing kind of China being replaced by Vietnam and Thailand. So good performance by Mexico, but not as good as some others. Now, the trade numbers, as I mentioned, are linked indirectly to the USMCA negotiations because the Americans have said that they want to reduce that deficit overall, and especially with Mexico. The fact that Mexico is now only the third largest deficit, quote unquote, I think actually helps Mexico. They can say, look, our exports to you generate a lot of imports from the US, and overall our deficit is pretty small compared to that of some other countries. So I think that the concerns that this slightly growing deficit is going to hurt USMCA per se it doesn't really stand up when you compare it to that of other countries. There was a very interesting article today, actually, by our mutual friend JP Spinetto, the LATAM opinion columnist from Bloomberg, saying that Mexico's strategy with respect to USMCA is to sort of seduce and charm the US and the USTR representative Greer in particular, sort of invite him to Mexico. Ebrard goes to see him in the airport. Sheinbaum receives him in the Palacio Nacional. And after the meetings with the Mexicans, he's always pretty nice about the Mexicans, saying how pragmatic and constructive they are. And JP's sort of argument is that by being very patient, by being very constructive, ultimately Mexico will get a good deal out of the US, even if he and everyone else would recognize that these delays in getting a deal hurt investment and therefore growth. Now that's very, very different to a Substack that Viri Rios, the prominent economist, sometimes aligned with Cuatro, who sort of says that Mexico should learn from Brazil and Korea and be tougher on the US, and only by being tough to Trump you get sort of concessions. And her argument is that Mexico sort of take a playbook out of China and develop some national industries by copying what China does, and be a sort of a strong economy in its own right, which will give it more leverage to negotiate with the US. I mean, I think Viri's Substack contains like two really quite different ideas. One, be tough on Trump and you'll get a better deal. And then secondly, sort of plan Mexico on steroids and maybe copy some IP from China, which in turn copied it from other people. And so I think it's probably a mistake to sort of mix those two things up. But I'm on JP's side. I think that the strategy of being calm, patient, and pragmatic ultimately is going to get a better deal. And Mexico's in a different position to other countries because it can't afford, because given how big the U.S. economy is and how important it is to Mexican exports and overall Mexican GDP, can't really afford to run the risk of a blow up. Brazil can. Brazil trades more with China than the U.S. So they can go for it. If it works, that's great. If it doesn't work, that's, not the end of the world. And the U.S. knows that. So they, in turn, can't be too aggressive with Brazil because they know that Brazil can turn their back. But I don't think Mexico has that opportunity. So comparing what Brazil has done, and anyway, Brazil, it's not even clear that Brazil's strategy has worked. They've got some new tariffs right now. But I think it compares two very different stories. What's your take, Eduardo?
I think it's a very, I wouldn't, you maybe use the word naive to think that one country should act like another one when the circumstances are extremely different. I mean, now I'm not saying that Mexico should not play a tough hand. Sometimes it has. I've been a bit surprised that Mexico has not raised any tariffs like Peña Nieto did when Trump did. There are subtle ways of doing. Now, I don't disregard Mexico's strategy as being bad at all. Like you say, I think they're moving forward. They're addressing the issues that matter to Trump and Greer. Now, will they be able to convince them with the deficit numbers that you just gave? it's getting harder and harder because Trump and company do not understand that deficits are driven by things other than tariffs. But nevertheless, if Mexico can show itself as an ally to fight what China has done to the world in terms of subsidizing its industries or taking property rights from companies and using them to advance their own interests, then I think the chances of Mexico getting a deal are much higher. In other words, the carrot and the stick should be used. I'm not saying which one should be better, is better than the other. I think both could accomplish certain things, but you got to understand where you're standing against the big giant up north where we sell 85% of our export products. I mean, we're just seeing it right now, the reaction of the U.S. by banning avocados for Michoacan, which is a multi-million-dollar industry. So you gotta play your hand very carefully when you're dealing with Trump. Claudia has gotten great marks here and abroad for doing that. It's been tough. There are a lot of other issues being mixed as well in trade. So I'm more inclined that Mexico should carve its own destiny, its own way, listen, look what others are doing, but not necessarily imitate them. The circumstances are too different, and the potential disruption or the potential gains are also very different. If Mexico can convince the states that it's an ally in fighting depressed price products from Asia, I think we have a chance of winning. There are people on the White House that are very anti-trade, and you got to convince them that we are partners in that anti-trade mentality versus other countries, not the North American region. So the numbers prove that we're very integrated. Trump is always more careful with Mexico than with Canada, for example. So they're doing something right, I think, like you say, and like JP says. So I'm for that type of strategy for the time being.
You mentioned avocados, and that's on the front page of most Mexican newspapers this morning. As many people would have seen, the U.S. temporarily halted avocado shipments from Michoacan, not from Mexico altogether. Right. But there's only one other state that's authorized to export avocados to the U.S., which is Jalisco. So Michoacan is about 75% of total avocado exports to the U.S. following a security alert. So basically, the U.S. officials from the Department of Agriculture inspect Mexican avocados in situ, and when the situation gets too dangerous or they get threatened, they stop the inspections. By stopping the inspections, they basically stop the exports from that area. They've done this several times before, but it's a big deal. It's certainly a huge deal for Michoacan and that part of Michoacan, because Michoacan itself is a huge state. But in the Tierra Caliente, last year, Mexico exported about $3.7 billion of avocados, and 90% of those exports were to the U.S. And it's Mexico's second largest agri-food export after beer. So until this announcement yesterday, as we speak, 2026 was looking to be a record year. I think volumes surged by 40% or so in the first half. So avocados were doing really well. And this is obviously gonna maybe it's just for a day or two, maybe it's for much longer than that. But I think it does send a message that security is a big issue, not just for the people who live in Mexico and suffer from it directly, but it's also a big economic issue because they're clearly blocking this because of the threats on the lives, in some cases, of the agricultural officials who are inspecting it. I mean, some people, perhaps many people, maybe they're right, will say that this is driven by other issues apart from just security, that the U.S. sort of flexing its muscles, sending messages to the U.S. and so on. I don't know enough about it to see if that's true or not, but what the reality is that there are, if you included direct and indirect employment, it's quite a labor-intensive activity, avocados. Apparently, I read that 300,000 people are involved directly or indirectly in avocado production. So it's a big issue, and unfortunately, if it doesn't get fixed, it's probably just going to make the security situation worse, as people won't have avocado employment, and they'll be more tempted to go into organized crime. It'll be easier for organized crime to get them on their side if they're not getting jobs from avocado. So it's a worrying development. It's really breaking news, so it's too early to reach any firm conclusions. But I thought I'd mention it since you brought it up, Eduardo.
Oh, thanks to clarify it, Damien. And yeah, I mean, for the U.S. consumer, avocados, it's a big thing. Everybody eats avocados now in America, as you know. So these issues work both ways, and that's the way trade works, both ways. It affects one, but it also affects the other. So, and they've been able to resolve these issues before, and I hope they do again. Mexico seems to be doing some progress in terms of security in other places. Michoacan is a hard bargain, but let's wait and see what happens, and maybe the avocado exports will resume in not the too long distance future.
Yeah, I mean, what's crazy from my perspective, at least, is that the U.S. only allows exports in effect from Jalisco and Michoacan. There's other areas like in Estado de Mexico. There are plenty of areas which could be growing and are growing avocados, but they're exporting to Canada or consuming nationally. So one of the things the U.S. could do is reduce the importance of Michoacan by allowing exporters to go to Estado de Mexico and other areas and diversifying. A friend of mine who has avocados said, "Be careful what you in Estado de Mexico." Said, "Be careful what you wish for, Damien, because if Estado de Mexico starts exporting avocados, we're going to start getting organized or more organized crime in Estado de Mexico, because the avocado is such a cash-generating crop that it attracts organized crime. So better to export to Canada and to sell domestically and get the organized crime in Jalisco and above all in Michoacan." So there's always a second derivative. When you change one thing, something else changes as well.
No doubt, and maybe avocado prices in Mexico will go up, and then you and I will be affected by it or whatever.
Well, right now they're going to go down this week, at least, because they're going to have to dump them. They're going to have to dump them in Mexico, and they'll probably go down in Canada as well, wherever else they can send them. So I don't think they last very long. So we'll see.
Exactly.
Maybe they'll. I mean, I was like you in Europe, and if you live in Mexico and you buy avocados in a fancy supermarket in London, you're sort of shocked that one avocado more or less costs what 10 avocados cost in Mexico. So
yep,
hopefully
the same in the States.
So moving on, Mercado Libre, the huge, of course, e-commerce and fintech player with operations in Brazil, Mexico, Argentina, reported second quarter. They're listed in NASDAQ, so they report a bit later than the Mexican companies. They reached at a consolidated level, including all the countries where they operate, reached an important milestone, $10 billion of quarterly revenues for the first time ever. And growth revenues were up, extraordinary for a company this size. They managed to grow revenues by 50%, or 43%, excluding exchange rate movements. And their credit portfolio got up on the Mercado Pago side, got up to $16 billion, which was up 75%. So massive growth. The stock is down. I'm speaking on Thursday this morning, 7% roughly. And I think the market was a little bit, clearly it factored in some of the very strong sales growth, but I think they were a little bit negative, or appeared to be a bit negative on the EBITDA margin, which has come down from last year. Was the EBIT margin, I think, was 6.7%, and they were a little bit skeptical about this very, very sort of strong investment that Mercado Libre is making in being bigger and bigger and sacrificing margins as a result of it. Now, in Mexico, the numbers were also extremely strong, especially from a growth perspective. In particular, they reported $2.3 billion of revenues, which was a 55% increase, maybe some of that in dollars. So some of that would have been helped by the strong peso, maybe 45% in peso terms. And Mexico, the e-commerce side was up 46% at 1.45 billion, and the fintech side was up 73%. So they're doing the fintech basically comprises two elements. One is the credit side, loans to merchant, credit card business, and then the acquiring business, which is the terminals that you see around Mexico, especially in smaller shops and markets. They got to 1.2 million terminals, POSs, which is more terminals than every single other financial institution combined in Mexico. So they are clearly not in volume because their average transaction is much smaller than BBVA's or Banamex, but still impressive that they're roughly 50% of POSs in Mexico. Now, Mexico also had some headwinds. They on the terminals, the subsidies to roll out or sell these terminals increased as the costs of the terminals went up through higher chip prices. In addition to that, there's lower margins on their overall business in Mexico. I think that their marketplace, which is a high margin business, grew a little bit less fast than their direct retail sales from their own inventory, which is a lower margin business. So the composition also impacted margins a little bit. But overall, what I think from my perspective, at least leaving aside the stock market impact, they continue to, e-commerce continues to grow market share versus traditional commerce with these growth numbers of 50%. Clearly, ANTAD sales or overall sales in Mexico are growing sort of 3-4%. Secondly, although we don't have data on this, but it's logical to conclude that within e-commerce, Mercado Libre continues to gain share, because I very much doubt that the market overall is growing at these 45% numbers. It's probably growing at 20% maybe. So there's still increasing. And thirdly, and they talk about this a lot in last night's conference call and in the brokerage reports, what they're finding is that there's a very positive flywheel effect between the e-commerce and the fintech side. People with a Mercado Pago card are more likely to spend more money on the e-commerce, and people on the e-commerce side are more likely to have a Mercado Pago card, so that there is this kind of mutually beneficial sort of cycle between the two elements, two pillars of their business that makes it very difficult for someone else to replicate, because none of the other fintechs have a big e-commerce business, and on the e-commerce side, at least Amazon doesn't have a sort of meaningful financial business in Mexico. So they've got this kind of inherent advantage by running these two businesses together and finding the synergies between them.
Yeah, I think contrary to what we said earlier about Pemex, Mercado's second quarter numbers were not that great. Although, I mean, what you just described is very impressive for such a large company of growth rates in revenue and things like that. Apparently, it was the margins that impacted or didn't make investors happy, that they were compressed a little bit versus what they were expected to report. But other than that, I mean, the way it's growing, the number of points of service or point terminal services, it's impressive. The fintech branch versus the retail branch, I think, is leaving Amazon in the dust in some ways or in others here, at least in Latin America. So very little much to add, other than I think that the compressed margins, from what I read, was the reason why the stock reacted negatively to the numbers. But other than that, it's a growth story by far, and will be like that, I think, for a long period of time.
So moving on from my side, at least the last significant note we have, SuKarne. Reuters reported that the beef company in Mexico, SuKarne, is for sale. They said that it could be worth $2 billion. It's a family-controlled company. It's one of the largest food and protein companies in Mexico. According to the Reuters story, SuKarne represents 75% of total Mexican meat exports. Quite extraordinary. And there was a really, really good white paper story back in 2021 that SuKarne then generated $3 billion in annual sales, and employed 13,000 people. Well, I think 5 years later, some people I've read are talking about it employing 30,000 people and sales as much as $5 billion. The company is controlled, I think more than half of it is owned directly by Jesus Fiscara Calderon. He bought the business I think back in 1997 and has grown it. It's a vertically integrated business. So they have the cattle, the slaughter, the packaging, the distribution centers, refrigeration, delivery routes, and branded stores, which is why many people are familiar with it. And he's an interesting character. He apart from based on the Reuters numbers of being a billionaire based in Culiacan, he also has had a political career. He ran for governor of Sinaloa back in 2010. He lost. There was a photo of him alongside El Mayo Zambada, which was published in Reforma, that helped apparently contribute to his loss, and he had to deny that he had any relationship with El Mayo. It's obviously come back into the headlines since then. So this is a very large Culiacan-based business, and a lot of the kind of sort of speculation at the time when he was running for governor, as you would expect in any political campaign, about the relationship of the candidates with cartels and organized crime. I think in the white paper story, what they brilliantly kind of describe is how one of the things that they did that made so much sense from a financial perspective is that in the US, there's a lot of demand for premium cuts, ribeye, New York strip, T-bone. In Mexico, there's much more demand for kind of lower value intermediate cuts, beefsteak, pulpa. So what they were able to do is basically sell the part of the cow where the price was highest and where the demand was highest. So they were able to use the cheap beef for Mexico, simplifying it a bit, more expensive beef. But they even did this within Mexico. So the demand, in Monterrey, what people like to eat is different. They basically like barbacoa. So beef lip to Monterrey, they would sell, beef cheek. Apparently beef cheek is what people like in Saltillo. So they were able to kind of arbitrage the distribution of meat around the cow, around the world, even selling beef tongue to Japan where they like it, to make a lot of money. It's simplifying it, and there are lots of other reasons why they've done very well. But that was well explained in the white paper's story. Some 5 years ago, one of the first stories in white paper. As we've talked about, the US has blocked cattle, not beef, of course, exports from Mexico to the US. Now they've announced that they're letting the cattle back in a phased way, and this was due to screwworm, I think, and that created a lot of problems in the industry. JBS, the largest beef company, the Brazilian beef company, which is also very large in the US, its margins were negatively affected as cattle prices went up because Mexico couldn't export cattle, and they're not as that vertically integrated. So it was a big cost center for them. So now it's been reopened again, and maybe because of that, people are kind of even more interested in SuKarne, because it is vertically integrated and therefore much less vulnerable to these type of actions. I think JBS, without having any specific information, would be a very natural buyer if it really is for sale. JBS is huge. It's traded in the US, $35 billion market cap. So this would be quite a small acquisition for them. They're not that relevant or not relevant in Mexico, huge in the US, huge in Brazil, of course. So this would help them kind of integrate their operations, give them lots of cattle. And then for the owners, the Culiacan family, they've diversified into health. This could give them some money to grow some of the other businesses the Jesus Fiscara is interested in right now.
Yeah, I think you covered very well, Damien. What I would just add is, to me, what it's quite interesting is the fact of the matter that it's another Sinaloa Culiacan company that is very well run. We have the Coppel brand in retail and financial services. SuKarne with his Vizcaya family. I guess, I don't want to say that it's natural to the region to be good businessmen. I mean, the northern part of Mexico has always been more freer to do things than the central part, where the Mexico City, Guanajuato, Querétaro were more centrally concentrated and government oriented. I think there is more of a free-spirited will in the northern parts of Mexico. SuKarne is another example. Some of the companies that have also been speculated that might be interested in acquiring have been the Tyson Foods, Cargill, and the National Beef Packing Company in America. They're all large protein producers there, so SuKarne's integrated supply chain model would give them a strength and an advantage in controlling Mexico's meat supply chain and also having a partner to sell in the States in case, like you just mentioned, a trade complication comes and disrupts the trade of cattle or beef or whatever. So it's interesting. We'll have to wait and see whether this will materialize. Just two other elements, BBVA and Rabobank are the ones that are apparently, according to the Reuters story, handling the request to evaluate the company and search for a partner or a buyer. So interesting. It's always good to have new names mentioned in business publications like Reuters, the Wall Street Journal, Bloomberg, whatever, that are well run by Mexican families.
So that's it. Should we move to the interview with Ricardo Pintado?
Let's do that. Let's listen to Ricardo.
Well, it's a great pleasure to have with us today Ricardo Pintado. Ricardo is a managing director at UBS Wealth Management. He's based in Miami. He's Mexican and Italian, but was brought up in Mexico. And many of his clients are Mexican, not all of them. How are you today, Ricardo?
Good morning, Damien. I'm very well. Thank you so much. Thank you for inviting me.
Not at all. It's a real pleasure, as I said, to have you here. So we have Ricardo on the podcast really talk about two sort of different things, although they're related. One, UBS has put out some great reports recently on family offices and wealth management globally that has some data and some insights into the Mexican wealth management market. So I wanted to talk about that. And then secondly, I wanted to talk to Ricardo, who spent maybe 20, 25 years in wealth management, many of which, or most of which at UBS, to demystify the wealth management business. But why don't we kick off with the first part? Ricardo, new global family office report. It says that medium wealth has actually been declining in some markets, rising in other markets. How is Mexico faring when it comes to wealth accumulation?
So interestingly enough, Damien, last year's report shows that growth in Mexico continues to expand, probably at a lesser rate than some other areas of the world. But Mexico is still printing more millionaires every year. Last year reports show that Mexico has around 333,000 millionaire families, which certainly is kind of in line with the growth that we're seeing in other regions of the world. More or less, global wealth grew last year by around 10%. And Mexico was a winner in our studies because, as you know, also last year, the Mexican peso revalued against the dollar. So the studies are based in dollar terms. So Mexico was also a winner. But there's definitely a pattern of wealth continuing to be created in Mexico for sure.
And I saw that per capita, adjusted for population, Mexico has more millionaires than Brazil. You, I think, have a Brazilian wife. You know the Brazilian market quite well. Why do you think Mexico's produced more millionaires than our southern neighbor?
I mean, the reality is that per capita, Mexico has more millionaires quite simply because we have a smaller population. I think in absolute terms, we see more millionaires in Brazil than we do in Mexico.
Okay, but do you think there's something structural about the Mexican economy that makes it easier to accumulate millions of dollars?
I mean, I think it's no surprise that the Mexican economy is incredibly intertwined with the U.S. economy. And the U.S. has experienced, especially public markets, have done extraordinarily well over the last couple of years. And there's definitely been a spill-through effect into the Mexican market.
Makes sense. The report talks about some of the concerns that millionaires have, geopolitical conflict, rising government debt are among those concerns. What are Mexican, from your experience and from the report, what are Mexican millionaires most worried about today? And what are they doing about it when it comes to managing their wealth?
Listen, I think millionaires around the world share a lot of the same concerns. And as the report showed, obviously geopolitics is top of mind. The debt levels in certain countries is becoming something that is more and more something that is talked about within large family offices. And then, of course, the global state of economy around the world. I think in Mexico in particular, millionaires have have an additional concern maybe, which is the political stability and the rule of law in the country. And I think that is something that has come across in a lot of conversations. I think rule of law is something that is certainly a concern.
And do you think that's leading millionaires or multimillionaires to park more of their money offshore?
I think that wealthy families in Mexico have always had an important component of their wealth offshore. I think that because things have gone very well in many of the economic sectors in Mexico, the part that they have in Mexico has grown exponentially. So when you actually look at the total net worth, it would appear that the part that they have offshore is relatively small. But I do think that they've always tried to diversify and have something offshore. I think that's something that we've seen at least for the last 20 years that I've been doing this.
Did you notice a shift when AMLO took over in 2018 and we sort of for the first time in a long period had a sort of overtly nationalist left-wing government? Did you see people moving their liquid assets outside Mexico?
I think that the answer to that, Damien, depends on where you were kind of in the wealth pyramid. I would argue that most very wealthy families had been parking part of their savings offshore for a long time, even before that happened, right? Unfortunately, Mexico has had its political ups and downs for many years, and devaluations are something that are not new for the Mexican families. So I think that for the larger families, they already had been parking money offshore. I think for some newer entries into the wealth lists and into the millionaires list, maybe that accelerated things a little bit. But I believe that the trend has been there for many, many years.
And what do you say to people who say that people park their money offshore to avoid tax? Do you think that's still a valid concern and complaint, or do you think things have changed over the last couple of decades?
I would argue that things have changed dramatically. I think parking money offshore or investing offshore is certainly not tax evasion. Let's put it this way: is not as easy as it was. I think banks have become incredibly and more compliant in making sure that they're not part of it and trying to avoid it to the best that they can. I can certainly tell you that, for example, the firm that I've been working for, UBS, takes this matter very seriously. So I think that with all of the exchanges of information, the world has become much more transparent. It's much more of a level playing field around the globe. So while there might be people who still try to do it, I would think that it's the minority. Okay.
The report talks about succession in the family office report, and it's not specific to Mexico, but it says families are failing to, in some cases, educate or involve the next generation when it comes to handing over the family business or family liquid assets. Do you think that Mexico overall, when you look at your client base and the client base of UBS, is doing a good job at planning succession? And what would you recommend people do when it comes to succession when their children reach an adult age?
I think so. I mean, it's interesting that you mentioned that, right? Because succession is becoming a topic that is becoming much more relevant in our conversations. The reality is that this is a natural thing that is occurring because we're dealing with founders who are getting older. And eventually, mortality catches up with us all. It's interesting because Mexico, as you know, is a place where the wealth is still pretty much concentrated on the founder. And it's very much family controlled, most of the times connected, to an operating business. So in most of the times, you realize that the founder is not only the largest shareholder, he's the chief executive, he's the capital allocator, he's making all of those decisions. And along with that comes a lot of identity. So we find that most people have been postponing this conversation as much as they can. But eventually, this catches up to us all. And as per UBS studies, there are trillions of dollars around the globe that are going to change hands over the next 10 to 20 years. So succession is something that's becoming much more frequent in our conversations. But I can understand that for many years, it's something that was not talked about.
And what are your recommendations?
So listen, it's undeniable that the earlier the succession talk is something that gets discussed amongst family members and planned for, the outcomes for success are going to be much higher. I have been involved in many cases where people inherit, and in many occasions they had no idea that there was really so much. And then there is the total paralysis of analysis because they don't know what to do with it. They don't know how to take it. They were not trained for this moment. So I think it's incredibly important that families start working on succession plans as early as possible so then the transition is smooth. Because what you don't want is, and I've seen it in many occasions, complete paralysis by the heirs. Complete paralysis, and that basically takes a toll on the companies, takes a toll on the actual financial assets of the family. So yes, it is certainly something that we're seeing much more, and we're seeing much more families, working towards it. In Mexico, there was also a trigger over the last couple of years, which was a possible talk about an inheritance tax, which, as you know, has not passed. But just kind of the mention of it got people thinking about their succession. So I think things are accelerating. I think that families are taking this into consideration, but there's certainly a lot of work to do.
I come from a place where historically succession has been very much focused on the, for very rich or aristocratic families, on the oldest son. In Mexico, in your experience, is succession sort of equally split between men and women, between the oldest and the youngest, or do you think there's still a partiality to giving kind of the family crown jewel to the male heirs?
I think there's always been a partiality to giving more to the people who have been more involved in the family businesses, and historically it has been the males in the family. We're starting to see a shift by a newer generation who's really trying to make sure that their voices are heard within the family. As a firm, UBS is doing a lot to make sure that women are empowered, that people understand that women have the same access to information within the family businesses, and within the financial assets. But if you ask me, I think there's always been a bit of a bias to reward those that have been involved in the company businesses, and historically those have been the males.
In the family office report, it says that Mexicans invest more in fixed income, in bonds, when it comes to their liquid assets than other millionaire investors around the world. Is that your own experience with your clients? You have clients in Mexico and in the US and other parts of the world, that Mexican investors are a bit more conservative, a bit more kind of reluctant to embrace sort of the Magnificent Seven, the AI sort of plays in NASDAQ that until a few weeks ago were doing really well?
I think this has to do with how they perceive the risk of their everyday life and their everyday businesses. Historically, clients believe that the risk-taking is happening in their businesses, in their home country, in this specific case in Mexico. And therefore, if they want to diversify, whatever they have outside Mexico should be much more conservative in the way it is invested. Therefore, you do see, when you compare the asset allocation of an American billionaire and a Mexican billionaire, it's very likely that you'll find that there's a higher exposure to fixed income and conservative investments. there's also something else that should be noted, that in these studies, when you talk about billionaires, especially in the US, most of them have publicly listed companies, right? So that falls within the public equity bucket, even though they control it. In Mexico, as you know, my dear Damien, the percentage is much, much smaller. But I think it has to do with the way people perceive the risk. And in the case of Mexican clients, they believe that their basic risk taking is happening on a daily basis with what they do in Mexico. So they want their offshore assets to be more conservative. Similar situation happens also, with a lot of European clients. And I think that that's part of why the gap keeps on expanding. When you've had public markets that have done so well over the past 10 years, conservative investors have been left out. And I think it's a self-perpetuating cycle where risk-taking is getting rewarded.
Why do you think that Mexican private company owners are sort of seemingly quite reluctant to IPO their businesses, unlike the US? Is it this fear of public sort of disclosure of their wealth and security issues? Are there other factors at play when you talk to these owners of private companies and their reluctance to IPO and go public? Or is it maybe they just don't need the money because they have such good operating margins and cash flow that they don't need outside capital to keep growing or to defend themselves against competition?
From what I've seen, I think the big problem with going public in Mexico is the lack of liquidity. So you do see some extremely good companies, but the float is also so small that the shares is trading, well below book value in certain cases, right? And actually, I think over the last couple of years, Damien, and you know this better than me, but I think the trend has been the reverse. I mean, we've seen more companies going private again, leaving the Mexican stock exchange. So I think it just has to do with the depth of capital markets, the ease of going public, and certainly I would not minify or ignore the fact that probably the public disclosure in Mexico is something that a lot of families take into consideration.
Understood. Ricardo, if we switch a bit to the wealth management industry, in the age of AI and robo-advisors and pretty good evidence that it's very difficult to outperform the market, even if you're a hedge fund, what's the point of having a wealth management advisor vis-a-vis buying 10 dividend reinvesting ETFs, parking them in interactive brokers and hiring a tax advisor to ensure you're tax compliant? Like what's the value added in your view of wealth management? And maybe you can explain, because not everyone follows this industry that closely, the sort of difference between a broker, a private banker, an independent advisor. Just give us a little bit of a description of how the industry is sorted out.
More than happy to try, Damien. It's becoming very, very complex, and there's more layers being added onto it as we talk. From the way I see it, I think it pretty much depends on the needs of the specific family, right? For some people, going out and buying an ETF or that basket of ETFs might work perfectly well because that's kind of what they need and they have no other needs. Where I think private banking, wealth management, and a total, a global coverage comes into effect for families that have more complex needs and want a team to help them coordinate it all, right? So you can go to a broker and say, buy me the SPY ETF, leave it there and be happy with it. But most of the families we deal with have much more complex needs, such as the needs for multi-generational planning, the needs to understand cross-border, because a lot of the families that we care for are becoming global, meaning they might have a footprint in Mexico, a footprint in the US, a footprint in Europe. And whether that's in their businesses or whether that is with a family member who's living abroad, I think there's a huge advantage in working with a team which understands those complexities, can help you coordinate them, and can guide you along the way. So I don't think that there's a one size that has to, fit all. I think that in terms of product, I think the product offering is becoming much more democratic. You can go and just access a product if that's what you're looking for, and it might work very well for you. But if you want somebody who's going to help you coordinate everything that you might need and be with you along the way, then I think a model such as ours makes much more sense. But but it's very clear that ETFs have made investing, much more democratic, much more open for everybody. And I think it really goes down to what is it that you need? What is it? Do you need somebody with you to help you understand the wealth structuring aspect? Do you need somebody who can help you work on the governance? You need somebody that can help you make sure that everybody in the family kind of stays involved and how to do it. Then I do think that a bank such as ours, that has a history of 160 years, helping the world's elite manage their wealth, can add a lot of value. But I think it really, really depends on what you need.
So even within an organization like UBS or Morgan Stanley, JP Morgan, there are different models available to high net worth or ultra high net worth Mexicans, right? You have the private banking model, the brokerage model. Maybe just help us understand what the different models are available to millionaires and multimillionaires, and what the pluses and minuses or the pros and cons are of those different models.
The firm that I work for, UBS, has a fully holistic offering, right? Which means we can help you transact as a broker. We can offer discretionary mandates. We can offer you advice and guidance on a variety of subjects such as wealth structuring, governance, credit, banking. So so there's really pretty much everything that you might need throughout the wealth cycle. Because what we do, Damien, is really work with families throughout their whole wealth cycle, from an entrepreneur who then takes the company public or sells it. And then kind of the mentality has to change, where it's not only, wealth creation, but then you have an element of wealth preservation, because it's the mindset is very difficult. The mindset is very different from somebody who is an entrepreneur, who's 100% concentrated, who has basically full control over what he's doing, to then somebody who now is actually thinking about the generations to come, who knows he will not be around for as long as his money will be around, and how you plan for that. And I think it's very different. Going back to your question on offerings, I do think that there's a variety of resources out there. There's there's some very good internet brokers where basically they might give you some type of advice, and basically it's up to you to decide what to do. You execute through ETFs or through some, through mutual funds that they might have. Some people, and you mentioned it, have gone the route of independent advisors. They've been growing quite a lot. And these are people who do not work for any institution, but pretty much use the institutions as custodians to execute client orders. And then I would say there's a third level, which is kind of the private banking, the wealth management model of a firm such as UBS, which tends to be much more holistic.
Understood. Some of the independent advisors say that the fully integrated banks like JP Morgan, UBS, Morgan Stanley, Bank of America, and so on, have conflicts of interest because they earn an additional commission by selling their own mutual funds, for example. So they both make a fee on the assets under management typically, and then they make a fee for promoting their own funds. Whereas the independent advisors only make a fee on the assets being managed, but don't, for the most part at least, get retrocessions from promoting specific products. What's your response to that line?
So I think that while it might be undeniable that that has been the case, I do think that in the end, even independent advisors go back to established banks for custody, right, and for product. I think the world has become much more transparent. I think that firms such as ours are held to much higher standards. There's implementation of a fiduciary duty. I think the regulators have become much more strict in precisely placing guardrails to make sure that the client interest comes first. And I know a lot of it could also come down to kind of the individual and the way the individual kind of structures the way they work. I can tell you for a fact that the way we work is mostly a fee based on assets, where basically we try to execute with the product that makes more sense for whatever the client's trying to achieve. with a full understanding of taxation and what the end implications are for the client and trying to be mindful of that. We coordinate with all parts of a family office so the way we see it is, things work best when we coordinate, when we can have access, to the client's lawyers, to the client's accountants, because in the end, we're all working for the same family. So I think that, yes, there might have been conflicts of interest in the past, but I think more and more, and especially larger clients and working, with serious institutions, have a way of fully understanding, what the fees are, making sure that everything is much more transparent. And the reality is that the beauty of what we do is that we really are in it for the long, long haul. This is never about a transaction. It's about a relationship. So I think that makes a big difference.
Historically, people sort of thought of the Swiss banks as places, leaving aside the tax issue, which we've already addressed, as a place to sort of preserve wealth. And the American banks, the Goldmans and the Morgan Stanleys, especially were sort of stronger places to accumulate wealth. Do you think that, with UBS, 30 years ago now, buying Paine Webber and becoming as big, if not bigger, in the US than in Switzerland, that distinction between kind of Swiss and American wealth managers, private banks, is no longer relevant?
I think that's changed completely. I think that point might have been valid, prior to 2008, 2009, where the world, as you know, changed radically, and the whole financial system has become really much, much more transparent. I think that clients that work with a UBS in the US are still as focused on performance as growth as they would be with any other firm or any of our other competitors. I can tell you that we have a lot of pressure from clients to make sure that the performance is as good as it can be within the risk parameters that they have set. And I think people are becoming much more sophisticated. Family offices are becoming much more sophisticated, especially Mexican family offices. They tend to benchmark quite a lot. So we are really held to a very, very high standards. And I would actually argue that I think UBS in the US is spectacularly well positioned, given the fact that we do have the flexibility of acting like a broker-dealer, but we carry a very strong DNA of a private bank where capital preservation is foremost. And I still think that no matter how aggressive clients want to be, how much they want to go after performance, capital preservation is still always something that is incredibly important for all the families we work for.
JP Morgan UBS exited onshore Mexico wealth management. And I don't think any of the big global private banks are onshore anymore. Why did they do that? Why is onshore wealth management of liquid assets not interesting in your view?
Damien, I would argue it's not that it's not interesting. I think you really need to have the scale. You really need to be, a top player for it to make any sense. And I think that there's been many firms that have tried to do that in Mexico, but competing with the big Mexican banks who have been doing this incredibly successful for decades becomes something very difficult. So I would argue that that's the reason why a lot of these first-grade global banks tried to be a competitor locally in Mexico and then decided that it was maybe not in their best interest.
And what about the other way around? Are you seeing the Santanders, the BBVAs, the Banortes more aggressive in the offshore wealth management, trying to integrate the onshore client that they already have with the offshore asset?
Yes, I think there's certainly a push to do so. And I think that is part of what every bank wants to be, right? Ideally, you want to capture every dollar of your client wherever it is. Does it really work out? I don't know. I guess we'll have to see. I go back to the 2008, 2009 period where we have, the big global financial crisis, which I think changed a lot of the landscape for banks, where basically prior to that, I had the feeling that all banks wanted to be the best at everything, right? And make sure that they could be the best for their clients in whatever the clients needed. And I do think that changed with the 2008, 2009 crisis. I think that a lot of banks, and I can talk certainly about UBS, they definitely have it very clear what they want to do. So UBS is a wealth manager, first and foremost. That is what they want to do. That is who they are. And I do think that a lot of these banks, which are mostly commercial banks trying to be a wealth manager, I guess we'll see. I understand why they want to do it, but I think it really takes a lot of resources. You need to have a lot of volume. It's incredibly expensive. So I guess the jury is out on that one, Damien.
Terrific. Well, Ricardo, thank you very much. I might mention to our listeners that I worked at UBS for almost 20 years, but never in the wealth management area.
Damien, thank you so much. Lovely chatting, and we'll be in touch.
Thank you for listening to Mex Moves. We hope to have you back. Please join us, share us, criticize us, and let us know what you think.